this is Matt from InvestiQuant. Today is Wednesday, February 24th, 2021, and yesterday we saw a violent reversal off of the lows, giving us a nice daily reversal pattern in the market. So we opened down sizably yesterday. Sellers stepped in aggressively off the open. We pushed down just shy of that round number at 3,800 in the S&P before buyers stepped in aggressively, and then from there we pushed higher almost the rest of the session, closing up at the highs. This has made a reversal-like pattern. And what we're going to look at this morning is that type of reversal-like pattern and see what that has led to historically the following session. So I'm going to go ahead and look at all four instruments here. The setup's going to be based upon entering the market long at the open, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time. Now, currently, we're seeing a little bit of follow-through in this overnight session as we are continuing back up towards the highs of the session from yesterday ahead of the open. And we closed up near them, but we did get a little pullback there in the last 30 minutes or so of trading. But currently, we are trading higher than we closed. So I'm going to go ahead and add gap up as the gap direction for this morning. I'm not sure if we're going to be opening above yesterday's high or not, but that might be something you want to dig into on your own looking at this pattern. I'm going to leave it out for now because we're not currently above yesterday's high, but we still have a little bit of time left before the open, so that may happen. That may be something you want to look at. All right, now next I'm going to go into the price patterns library, and I'm going to describe the price action that we saw yesterday. And the way I'm going to describe it is using two simple filters. One of the filters describing where the close was relative to the range. And I'm going to say that we closed in the top 25% of the intraday range. So that is available in the location of where was the last open and close for the session. And I'm going to hit equals next to close in top 25% of the daily range. That's also available here in the active today section. It is the second option. And then next, I'm going to add a little bit of price pattern context around the low that was made. So yesterday we made a 10-day low. So I'm going to go into the active today section, and near the very bottom, we've got the new lows section, and I'm going to go to this very bottom option of the new lows section. I'm going to click day after lowest low of the past 10 days. That comes from this new lows category, and there's a bunch of them in here. If I scroll down a ways, you will see it. There it is. But I've added it to the test, so that's the price pattern that I want to add, where it says we made the lowest low of the past 10 sessions, but we closed up near the highs of the session. And then last, I'm going to go into the indicators section, put us in a similar market environment where we are below a 10-day simple moving average, but above a 200-day simple moving average. And now I can click view results. All right, here we go. These are the results of going long at the open of regular trading hours, which is 9:30 a.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when yesterday creates a reversal-like pattern off of a 10-day low. So it made the lowest low of the past 10 days, but it closed up near the highs of the session, and this is taking place below a 10 but above a 200-day simple moving average. Now, historically, the S&P has 40 samples dating back to 2003. The NASDAQ has 39, the Dow 46, and the Russell 35. So similar sample sizes across all four instruments. And if we look at the win rates on them, they are a little bit mixed. So the S&P coming in just over 50%, 53%. The NASDAQ's the strongest of the group at 67%. So fairly strong pattern there. The Dow coming in about 59%, and the Russell the weakest of the group and the only one below 50% coming in at 40%. If we look at the average win to average loss, you'll see the average win is sizably larger than the average loss in the S&P, and the NASDAQ, and in the Dow. The Russell is very similar in size. So this pattern, for whatever reason, has not really worked out in the Russell. It's been a little bit weak, and there's no skew for a larger average win or average loss. But the others have had larger average wins, and some of them have had some really strong win rates, like the NASDAQ for follow-through on the next day. Now, keep in mind, this is simply gapping up. Like I said, we may end up gapping up above the prior day high, and that does improve this pattern for some of these instruments. That might be worth looking at as well. But hopefully you found this helpful. Good luck today, and we will see you next time.